Hello friends, welcome to Veranda Excel. So now we are going to discuss about amendments relating to refund, deemed export supply. See, here also there is not many amendments, but one amendment is in deemed export supplies. If you see, and one more in adjusted annual turnover, adjusted total turnover definition. Right. First, deemed export supplies. It's basically a clerical amendment, I would say. See. As per third proviso to Rule 89(1), what are deemed exports? Let's example, if I supply goods from DTA to an EOU. So if I supply goods to an EOU, it is treated as a deemed export supplies, right? So either I can claim refund or customer can claim refund, right? So in respect of supplies regarded as deemed exports, either recipient or supplier is allowed to file a refund application, either of them. However, the supplier can seek refund only in case where the recipient does not avail the ITC on such. So only if recipient does not avail ITC, I will be able to claim refund, because only one person can take benefit. And further undertaking to that effect that the supplier may claim the refund. So we have to get this from the recipient. Otherwise, recipient of deemed export supplies can claim the refund. But it never said recipient can claim ITC also. That's what they are clarifying here. It has been clarified that in case of the recipient of deemed export supplies claims the refund, there is no restriction on such recipient in claiming the ITC. That's what I said. So see, either supplier, if I am a supplier, I am supplying to an EOU, either I will pay tax and claim refund, or in that case supplier should not claim ITC. But if I don't claim, then supplier can claim refund. For that he will have to take ITC. So that's what they have said. When the recipient claims refund, there is no restriction on the recipient in claiming ITC on that supplies. Right? Simple, very clerical amendment. Next, clarification on adjusted total turnover under Rule 89(4). See, there was a notification in 2020 where they capped the value at 1.5 times. See what has happened. Let's say example, there was certain fraudulent transactions reported. I'll give an example. So let's say example, certain products are sold in India, let's say for 1 crore rupees. 1 crore rupees. Same goods if I'm exporting out of the country, I'm valuing it at 5 crores. I repeat, I'm supplying goods in India worth rupees 1 crore. Same goods I'm supplying outside India for exports. Same goods for 5 crore rupees. 1 crore and 5 crore is a huge difference. Why some people were doing this? To claim higher benefit for refunds, etc. So they were overvaluing their goods to claim excess input tax rate refunds. So government said nothing doing. So what they said is they capped the export value at 1.5 times. So they said whatever value I locally sell the goods, the export value, the zero rated supply of the goods cannot exceed 1.5 times of the value of the like goods which are sold in India domestically. So if I am selling for 1 crore, export it can be maximum 1.5 crores, not more than that, not 5 crores. It cannot exceed 1.5 times. So if locally it is 1 crore, export it cannot exceed 1.5 times, that is 1.5 crores. So that is the logic of this 1.5 times, right? Based on this, now let's see what is the amendment they have done or clarification they have given. See, the value of export or zero rated supply of goods to be included calculating adjusted total. So when I'm claiming refund, the definition says net ITC into total turnover of basically zero rated supply of goods plus zero rated supply of services by adjusted total turnover. So the numerator was capped at 1.5 times. That's what they are saying. So they said that denominator also, in the denominator also will take domestic as well as export. In that export also it should be capped at 1.5 times. We'll see an illustration. Your concept will be very clear. So the restriction 150% of the value of the goods domestically as applied in turnover of zero rated supply of goods would also apply to the adjusted total. So that's what they're saying. Numerator it applies. So denominator value also should be capped for 1.5 times, because denominator also has export value. See, let's say net ITC for an exporter who wants to claim refund is 270 rupees, right? So 270, right? ITC is 270. Now see look quantity, 5 quantity. Same quantity he is exporting also. So when he is selling domestically, he is charging 200 rupees per unit. 5 units he is supplying, 200 rupees per unit. But here export, in case of export, 350 rupees per unit. So here how much value it happens? 200 into 5,000. Here it is 350 into 5, 1,070. So if you see, the value is 200,000 rupees, right? So same quantity if I am exporting, it should be capped at 1.5 times turnover, right? So when I am claiming refund, 170 rupees into my export turnover. Turnover of zero to supply of goods plus turnover of zero to supply of services divided by total adjusted turnover, right? So export related turnover is 1750, but I should cap it 1.5 times, otherwise I'll get huge refund. So they want to reduce the value. So 1000 means 1.5 times will be 1500. 1.5 times. Getting my point here? Simple. Local, domestically 1000, so 1.5 times 1500, the value is capped. So 170 net ITC, this is the net ITC. 170 into 1500 divided by total adjusted turnover, adjusted total turnover. This consists of zero to supply of goods plus other turnover, so locally also, so total turnover basically. So total turnover is basically 2050 here, correct? So I can take it 2050. So what they have clarified here is, when I am doing 1000 plus 1050 here, this value also should be kept at 1.5 times. So 1000 plus 1.5 1500, so 2500 only should be coming in the denominator, because here total turnover will come. So here this plus this I will put 2750 generally. So that's what they have clarified. Here we have capped, so here also automatically capped value will only come. So 1000 plus 1500 the capped value, so 2500 only will come to arrive at the amount for claiming refund. That's what they have clarified, because there was a confusion that here I have capped but here I need not cap. See the answer here. So 1000 rupees plus 1500, 2500 rupees we should take at the base price. So 270 rupees into 1500 divided by 1500 will comes to 162 rupees, like we worked out in the previous slide. Simple amendment. As I said, refund chapter doesn't have much. Simple amendment, 2 amendments. One was a clerical mistake, clerical clarification, which is on deemed export supplies, and this is one small clarification that on the denominator also you should cap it 1.5 times. Simple. Right? Next. So we go to the next chapter now, offences and penalties. Now, this offences and penalties basically is the last chapter for the GST syllabus. I repeat, is the last chapter for the GST syllabus. After that we will go to customs and FTP, right? So offences and penalties also, there are 2 amendments basically in section 122 as well as 132. Let's see. In section 122, 1A has been introduced. Let's see. Any person, so they have inserted a clause, any person who retains the benefit of a transaction covered under clause 1, 2, 7 or 9 of subsection 1. See, subsection 1, section 122, subsection 1 has various list of offences. This chapter is offences and penalties. So section 122 lists approximately, I feel, 11 offences. So 122.1 gives 11 offences, that you supply goods without invoice or receive goods without invoice, take credit, received invoice without goods. So you have a penalty equal to the value of the goods. Now, but what happens? There might be certain masterminds in a transaction. Example, say in GST there have been a lot of fraudulent transactions or arrests have been reported. So many times what happens, let's say example Mr. X, he masterminded an operation, he influenced a person to create a fake entity and supply goods to someone else with a fake invoice. So the person who supplied goods and fake invoice will be liable to penalty under section 122. But the person who facilitated, motivated him to do and who gave the entire idea and masterminded that plan, he will not be under trouble at all. He will have a general penalty, that's it. So to make him equally liable, they've inserted this. If you see, the person who retains the benefit, because he would have got some commission, who masterminded the plan. See, let's say A and B, A and B. X was the person who masterminded. So X gave an idea to A that you create an entity, fake entity and supply fake invoice so that B can take fake credit. So X took a commission from A. In X name there is no registration, nothing, but A registration was in the name of A and A was doing this transaction. So when A gets caught, he will be penalized under section 122 and section 132, he will be penalized under arrest also. But the person who facilitated this transaction, he will be liable only for general penalty. For this, they amended this and they inserted this, that any person who retains the benefit, so after this transaction I am getting some commission, 1%, 2%, 5%, I am getting some commission. So that person X also is responsible equally. So they are saying under clause 1 also, he will be also equal in the sense he will also be held responsible, right? So what action, that and all we will see. So basically they have inserted this clause. Now what are these 1, 2, 7 and 9? We will see that now. At whose instance such transaction conducts? That's what he said, the person who is directing them to do this transaction. shall be liable to a penalty of an amount equal to the tax evaded or ITC availed or passed on. See, so only say no, he is equally being made responsible and liable for the fault or offence that is committed. So if you see, prior to this amendment, so penal provisions have now been prescribed for actual perpetrators. See, because someone is doing fraud, someone who is perpetrating that, he is coming out of it. So they are saying penal provisions have now been prescribed for the actual perpetrators who used to retain the benefit of the transaction conducted by someone else. So someone else committed the fraud and they are taking the benefit. Prior to this amendment, the penal provisions were for a person who commits of an offence, but the amended provision has expanded the scope to include a person who causes to commit and retains the benefit arising out of the following offences. As I said, Mr. X, who is masterminding this transaction, getting commission out of it and easily moving out, he has been equally made responsible and liable now. So I said now clause 1279. So a supply of any goods or service both without supply of invoice or issue of an incorrect or false invoice. So I am supplying goods without invoice at all. So black money, unaccounted supply. Issues any invoice without supply of goods. So someone wants a fake credit, someone issues a fake invoice so that a customer can take credit. There is no supply happening at all. Just to take fake input tax credit, invoices are being issued, printed and issued, that's it. Takes or utilizes the ITC. So now this is the recipient side, that was supplier side, recipient side. Clause 7, the person who is availing the credit without actual receipt of goods. See, someone supplied invoice without receipt, someone is taking the credit also on that invoice, no? So he is also made responsible. Takes or distributes ITC in accordance with section 20 of the, so that is basically ISD provision. Someone is distributing excess credit. In all those cases, the penalty has been made equal to those who are influencing or directing this transaction to be done and getting a benefit out of it. They have been equally made responsible under section 122, right? Coming to next, section 132, punishment for certain offences, right? Now, what is the section 132 talking about? It's talking about arrest. So, when people do fraud above prescribed threshold, they are liable for arrest. Similarly, like they made an amendment in section 122, 132 also felt the requirement of this amendment. Why? Because someone who is masterminding the entire transaction, getting benefit out of the entire transaction, they are not getting arrested, but the other person is getting arrested. So they said the person who is facilitating this transaction, the mastermind, should also get arrested. So they have made amendment to this. Whoever commits, now this they have included the brackets, whoever commits or causes to commit. So someone who committed will get arrested, but who causing to commit. So X caused A to register and supply fake invoices to B, or causes to commit and retain the benefits arising out of any of the following offences. So someone is facilitating is also getting arrested now under section 132. Supplies any goods or services both without issue of invoice, issues any invoice without supply of goods, leading to wrongful availment of ITC, avails ITC using invoice referred to in clause B, or here also they have inserted, or fraudulently avails ITC without any invoice, or collects any amount of tax but fails to pay. So I am just supplying goods, collecting tax but not paying to the government for a period of more than 3 months, keeping in my pocket money, not paying to the government, and evades tax. Here they have deleted this, fraudulently avails ITC, because this has been moved here. So they have deleted here. Evades tax or fraudulently obtains refund from where such offence is not under clause A to D. In this case, the person is liable for arrest. Here they have just mentioned that the person who is facilitating also and getting benefit out of this will also be liable for arrest, right? So now with this we are covering the amendments relating to GST syllabus. Now we venture into customs and FTP. So in customs, I said in the beginning of the first part of the amendments that only in the first chapter there are amendments, basically levying of an exemption from custom duty. There are basically this import of goods at concessional rate of duty rules 2017, which has been amended now as amended rules 2021. So these rules are amended, which is only the amendment basically in this chapter. These rules are amended. So all those rules we are going to see here. Then we'll go to FTP. FTP, just 2 amendments in FTP, that's it. Now, so in this chapter, what is this amendment talking about? See, first let's understand this. what these rules are talking about. See, I can import goods without payment duty or at concessional payment of custom duty for manufacture of notified goods or rendering notified services. But if I do so, right, if I do so, then now I should manufacture notified goods. They have said even if I don't manufacture, I can give it for job work. Job work means someone else will manufacture on my behalf. So I should manufacture notified goods or render notified services, and if I want, I can outsource to also someone for job work. They are saying certain conditions, rules are prescribed for this, that when I send it for job work, when I import goods, so I have to furnish details where I am sending goods for job work. I have to furnish declarations to my deputy commissioner, assistant commissioner of my jurisdiction. So all these details I will have to furnish them. Reporting has to be done. I have to maintain certain accounts and records if I am doing these imports. Then if I import goods and there is some leftover goods after import, I could not use it, then what should I do? And if I import capital goods, with that I import certain, let's say example, I'm manufacturing some product which is exempt. So for that I'm, let's say there's no duty because I'm importing raw materials and I'm importing some machine also, let's say. So I imported some machine also without duty, and with that I'm manufacturing those goods. And after the manufacture is done, that capital goods I'm selling. So on what value should I charge? Or should I pay custom duties? All those things are there which we are going to discuss in this amended rules, right? Let's see. Rule 4 and 6 substituted. Importer to give prior information. Please note here prior information. So if I am going to import goods, let's say example, I am going to manufacture something. So let's say I am going to manufacture certain particular medicine here, certain peculiar medicine here, which I am going to manufacture. So I am importing raw material. So prior information itself I have to give to my deputy commissioner or assistant commissioner of customs having jurisdiction over my premises. So to him I will have to give a prior information that yes, I'm importing these goods for manufacture of these items. The importer shall provide information to the DC or AC of customs having jurisdiction where the import goods will be put to use for manufacture or for rendering output service, except after sale service, because after sale service is not eligible under this scheme. That some as goods are sold after sale, I am providing some service. Let's say example AMCs or after sale service, that is not covered. For manufacture notified goods or rendering output service from the premises where I am going to supply these goods, manufacture these goods, that premises jurisdictional officer AC or DC of customs, to him I am to get a prior information that yes, I am wanting to import these goods. What information I have to furnish? That let's see. The names and addresses of the importer and his job worker, if any. So my address, my name, address, and my job worker, if any, to whom I will give these goods for manufacture. The goods produced or processed undertaken at the time of manufacturing facility of the importer. What manufacturing process I will go through. The nature and description of the imported goods which I am going to import, and the manufacture of the goods at the premises. Nature of import output services rendered utilizing imported goods. Let's say example, I am into hallmarking jewelry. So I might import some machine, with that I will hallmark a jewelry and sell. Example I am just saying, that is not exempted activity, but just giving an example that there can be some service for which goods are required to be imported. So that details I will have to furnish. So only they said prior information to be given to the jurisdictional AC or DC of customs, right? Next, rule 6, importer to give information regarding receipt of imported goods and maintain records. So before I said prior information, once the goods comes in under rule 6, I will have to give information within 2 days of receipt of imported goods. See here, receipt. So see, read this as a story, as a concept, you will remember easily. But if you see this number of rules, you will get very confused. So only I am telling you as a story and a concept, so that you can easily remember for exams, right? So rule 6, once you receive the goods, within 2 days you have to intimate a jurisdictional AC or DC. So the importer shall provide information of the receipt of the imported goods in the premises. The imported goods shall be put to use, right, within 2 days of such receipt to the jurisdictional custom officer. So my jurisdictional custom officer, within 2 days of the receipt, I have to give him information about the receipt of goods. Now further, now after receipt, what account should I maintain? Let's see. The importer shall maintain an account in such manner. So I receive the goods, now what account should I maintain? So I should keep accounts indicating the quantity and value of the goods imported, quantity of imported goods consumed, so how much I imported, how much I consumed, how much goods are sent to job work, nature of job work carried out by my job worker, of goods received after job work, so how much goods I received, how much I consumed, how much I sent to job worker, how much are received back after job work, of goods re-exported if any under rules, and so if any goods are not completely used, so I am resending it back for some reasons. All this I have to maintain plus remaining in stock according to bills of entry. So all these details I will have to maintain as per my stock. Further, I need to file a quarterly return furnishing these details. The importer shall submit a quarterly return by the 10th of the following quarter. So I have to file a quarterly return by 10th of every quarter furnishing the details, prescribed details. Next, there is a new rule which is inserted, rule 6A. Now what this rule talks about? Procedure for allowing imported goods for job work. As I said, the imported goods, the manufacturer, he need not manufacture himself, he can send it to job worker also. So the importer shall send the imported goods except, because why except? Because these products cannot be gold, jewelry and articles thereof and other precious metals and stones for job work. I cannot send for job work, not permitted. Other goods, yes, I can send for job work, but imported goods such as gold, jewelry and articles thereof, precious metals or stones, I cannot send for job work. So only said except for manufactured goods after giving an intimation to the in duplicate to the jurisdictional custom officer of his intention to do so. So if I want to send goods for job work, I have to give an intimation to the jurisdictional custom officer that yes, I am wanting to send goods for job work, which should not be any of these goods. So prior hand I have to inform him. The importer shall also specify following particulars: the name and address. So he should furnish these details to the jurisdictional officer. Name and address of the job worker to whom I am sending the goods for job work. Nature and description of the job work to be carried out. So what process the job worker will be carrying out. Quantity and description. See why these are required? Because I have imported these goods without payment of duty or concessional rate of duty. So government wants to monitor these goods, that these should be used for the proper purposes and notified products as required. Quantity description of the goods intended to be sent to the job work. Next, the jurisdictional custom officer shall forward a copy of the intimation along with the particulars specified about to the concerned customs officer under whose jurisdiction the premises of the job worker is situated. The importer shall send the goods to the premises of the job worker enclosing a challan, delivery challan under GST law, specifying the description quantity of the goods, and it should come back within 6 months. The maximum period for which the goods can be sent to the job work shall be within 6 months. So when I send the goods for job work, the goods should come back to me within a period of 6 months. I've sent the goods for job work, within 6 months the goods should come back to me. In GST law, if you remember, it was 1 year. In GST law it was 1 year, here it is 6 months. Goods should come back to me within 6 months. Next, insertion of new sub-rule 3 in rule 7. What is this new sub-rule 3? Let's see. The importer with the permission of jurisdictional DCAC of customs may clear the imported goods, capital goods. See, I imported capital goods without duty. I manufacture the notified goods, etc. Done. Now that machinery, what to do capital goods? Because I imported without custom duty or at a concessional rate of duty. Now if I sell that, I will have to pay custom duty. Not normal GST, I am talking about custom duty. Now if I have to pay customs duties, on what value should I pay? So they have said depreciated values. So for that, rate of depreciation is also prescribed. So the importer with the permission may clear the imported goods after having been used for the specified purpose. So specific purpose only should have been used because you were eligible to claim the benefits, so you should have manufactured only the notified goods on payment of duty equal to the difference between the duty liable on such goods but for the exemption availed and that already paid. So whatever the duty benefit you availed, to that extent, right, if any at the time of importation, to that extent you will have to pay along with interest. So how much duty you saved, now you have to pay on what value? On the depreciated value, on the straight line method basis. So let's say example, you use for 6 months, you use for 1 year, you use for 2 years, depreciated value, on that depreciated value only you will have to pay. For every quarter in the first year, the rate of first 4%. So for every quarter a part thereof 4%. So 4 quarters means 16%. So if 2 quarters you have used, then 8% depreciated value, on the balance value only you will have to calculate. So let's say example, it is 6 months, then it is 2 quarters, because 2 quarters, it is 8%, 4 into 2. Let's say example, it is 4 months. So 1 quarter plus part of a quarter. So still it will be 2 quarters. So 8%. So 8% with the depreciated value, right? Second year 3%. Third year 3%. So second and third year it is 3% only. Fourth and fifth year 2.5%. And thereafter for every quarter it is 2%. So whenever you sell, after first year, after second, so depreciated value will keep changing accordingly. First year 4, second and third year 3%, third and fourth year, second and third year this, fourth and fifth year 2.5%, thereafter for every quarter 2%. So based on this you arrive at the depreciated value, on that you will have to compute the duty. Simple rules which are inserted in this chapter. So customs, this was the only amendment in the first chapter they have amended these rules, import of goods on basis of concessional duty, right? So that alone is amended, that we have seen here. Simple rules, you have to just remember as a concept. Last portion we come to is now foreign trade policy. Now FTP, foreign trade customs and foreign trade policy. In foreign trade policy there are majorly only couple of amendments, very simple amendments in FTP policy. See, FTP policy, if you see, it is extended till 30th 9 2021. See, basically FTP policy was for 2015-2020 March. Then they extended for 1 year 2021 March. Now they have further extended to 30th September 2021. That's the only amendment in this slide. So it is extended till 30th September. So FTP policy has been extended. So whatever the provisions are there in the FTP policy has been just extended as such till 30th September 2021. That is the only amendment here, nothing else. Next. Exemption from IGST and GST compensation cess. What is this exemption all about? See, if you are making imports, see, you can import goods without payment of duty, even without payment of IGST under advance authorization. So if you have an advance authorization, against that, see, when you do physical exports, you get advance authorization, right? So against that, you can import goods without payment of duty. So when you import goods without payment of duty, you will get exemption from IGST and compensation cess also in case of imports against advance authorization. So that benefit now has been extended till 30th September. So those benefits have been extended. Similarly, in case of EPCG scheme also. So under export promotion capital goods scheme, if you have imported capital goods under without payment of duty, including without IGST and cess, right, that benefit is still continuing. That benefit also was expired, so that also they have continued, extended till 30th September 2021. So here basically this amendment says exemption for IGST and GST compensation cess in case of imports under advance authorization, in case of imports under EPCG authorization, and in case of imports by EOU, EHTP, STP, BTP, export oriented unit, etc. Electronic technology parks. So these specific parks, EOU, etc., when they import goods, so they are also getting benefit from IGST and GST compensation cess, and that benefit also getting extended. Here the benefit is getting extended up to same 30th September 2021. See, these were all getting expired by 31st March 2021. So all these three benefits, advance authorization under EPCG scheme and goods of import goods by EOU, EHTP, STP and BTP, software technology parks, etc. Now these imports by them also, benefit of IGST and cess has been extended till 30th September 2021. Last, MEIS. See, MEIS basically is a script. Whenever we export goods, if a product is notified under MEIS, then based on the FOB value of export, a percentage of FOB value of export, we get a script, duty script, based on the export value as per the FOB value, on that as a percentage you will get a script, duty script. That duty script you can use against import of goods. See, let's say example, I export goods, so I will get MEIS scripts. MEIS scripts, we call them a script. So that will be a percentage of FOB value export. That script I can use it, I can redeem it against import of goods. So that MEIS has been put to an end. Now they have bought a new scheme. That's what it talks about. Benefits under MEIS are not available for export made with effect from 1st January 2021. So from 1st January 2021, MEIS scheme no more exists. Instead, they brought another scheme called as RODTEP scheme. It is called as remission of duties and taxes on exported goods. So if you have whatever taxes or duties, specified duties and taxes you use in the export of goods, that they will try to give you refund under RODTEP scheme. So that is made applicable to all export of goods from 1st January 2021. So MEIS put to rest and RODTEP has been implemented from 1st January 2021. This scheme seeks to refund to exporters the embedded central, state and local tax duties that were so far not being rebated or refunded. The refund would be credited to an exporter's ledger account with customs and used to pay custom duty on imported goods. The credits can also be transferred to another importers. So like MEIS, you could transfer. See, MEIS script, either you can use it to against your import of goods, or that MEIS script you can sell it also to someone else and the other person can use it against his import of goods. So similarly they have said the credit can also be transferred to other importers also. Simple. So MEIS goes off and RODTEP comes in, right friends. So just the last point in this, the exporter desirous of availing this benefit is required to declare his intention for each export item in the shipping bill or bill of export, because someone who wants to claim this benefit has to give a declaration of his intention in the shipping bill that yes, I am claiming RODTEP. The RODTEP is allowed subject to specified conditions and exclusions, right friends. So with this we come to a conclusion. All the amendments, majority all the amendments, important amendments, all of them in GST and Customs FTP, all the important and major amendments we have covered in our series of amendments which are applicable for CA final, and initial all chapters in GST were applicable same for CA inter as well. Right friends, thank you and take care. All the best for your exams.